Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Sell in May or buy? That is the burning question. We're going to see if we can give you the answer with our stock strategists Tracy Reinick and Dave Bartosiak and our ETF research director Nina Mishra. Dave, you say unequivocally buy.
Initially, yeah, buy, and this is why. I do a lot of pivot point analysis. So basically what this does is it takes last month's open, high, low, and close, and based on that range gives you certain values for potential support and potential resistance. And this month we opened above the pivot point, which is at 1864 on the S&P 500. So anything above 1864 gives a bullish bias for the month. And should the market come down and hit that, which it does about 70% of the time, then we should look for support there, and if not, then obviously you can say, okay, we're going to head lower.
Okay, so you're qualifying it buy within those parameters, right, as far as what the market's doing.
Right.
All right, Nina, you basically are saying that you're a buyer here, right?
Yeah, seasonal patterns do not always work. So I still believe that market is going to end this year a little bit higher with some small gains, maybe 8 to 10%. So if there is a sell-off, then that would be a good opportunity to buy. But I'll be buying quality names over here. I'll not be chasing those glamour stocks. So high-quality stocks with solid balance sheets, they would be a buy on dips. And I also keep my portfolio diversified. When there's a lot of volatility in the stock market, I think we should have some exposure to commodity and emerging markets as well.
Okay, Tracy, you're the value person in the room. Buy or sell?
May has been always, well, the last 4 or 5 years has not been good.
Yeah.
There's been like big geopolitical events that happened in May. Who knows? There's the Ukraine still kind of, looming out there, and maybe we'll have a black swan event. I don't know. But like Nina says, you can't always go by these things because that's just the last 4 or 5 years. That's not really a pattern. We like to say it is. But May overall hasn't been that awful of a month if you go way back in the history of the S&P 500. And it's like the second best month overall after December. Go figure. Like, that's weird. But, right here at these levels, we've rebounded off those lows that we saw a couple months ago. And it's not that cheap. As a value investor, I'm again having trouble finding value. So I'm not sure, the big caps seem to want to rally here a little bit more because everybody's moving into those. Small caps are a bit more dicey. I'm of the type to stay away from the small caps, maybe head more towards the safety of the big caps.
Okay, so let me ask you this. The April jobs data that came out last Friday, the 2nd of May, payroll number was not really too bad. It was a pretty decent number. So why didn't the market have a more positive reaction to it?
Yeah, I think the report was good. The headline number was good. They also revised the previous 2 months. So if you look at the average for the past 3 months, it is about 238,000, which is the best in 2 years. So those were the positive points. And if you look at the broader measure of unemployment, which includes the part-time and discouraged workers, that also declined slightly. But whereas the unemployment rate declined, it was mainly due to drop in the participation rate, which is at a 3-decade low. So that was not good. It seems that people are still dropping out of labor force. So overall, a positive report, but market did not react much because probably the market was expecting that the slowdown which we saw earlier this year was weather-related, and economy has started picking up slowly after that.
Dave, is this purely market reacting to technicals now and not so much economic news on the fundamental side?
It's tough to say. It's because we haven't had one clear-cut direction in the numbers. Obviously, the GDP number that came in was pretty disappointing, right? And then the job numbers, like Nina said, they were all right, So there's no one clear direction, and that's when you're going to get the fundamentals kind of taken over and us kind of bouncing between a few levels.
So what is everyone's take on this recent spate of mixed economic news that we've been seeing?
Well, I definitely think you can somewhat blame the weather. I mean, you know, we hate to say that because I always kind of mock the retailers and stuff who blame the weather, but it was bad, and it was bad in 2/3 of the country. And you can see it in the earnings reports. Even for companies that aren't retail or restaurants, they're all saying it was the weather. That's not surprising. I mean, some of the restaurants and retailers, they closed down half of their stores. And for more than just one day. So if you're closing down, you know, 4 or 5 extra days in a quarter, I mean, my gosh, yeah, you're going to get hit. But you can see it even in some companies that I normally wouldn't think were weather related. You know, well, you see it in energy with the drillers. A lot of manufacturers, even some of them had a shutdown. You know, but some of that, it's not all bad for the economy because. Okay, maybe you're not going back out to eat at the restaurant again because you already missed it from last month or whatever.
Right.
But for some of these other companies where, you know, manufacturing just kind of slowed, they're going to get it back in the second and the third quarter is what they believe. The demand is still there. You didn't buy the kitchen cabinets, but you're still going to buy them, but you're just going to buy them 2 months later.
So do we need to be concerned about a disconnect between the market and the economy? Dave, you say there's always a disconnect.
I feel like there always is because the market's always looking forward, right? Otherwise, all we'd have to do is chart the market versus GDP, and then boom, we'd have it all figured out, right? It's not the way it works. Okay, we're always looking forward. We're always looking what's going to be the next driver, where are earnings going to come from. So I think you usually have that disconnect.
Tracy and Nina, you don't think so?
Yeah, I don't see a disconnect. I mean, economy has just started picking up. Earnings reports were not so good, but they were not terrible either. So same as the situation as with the market. I mean, we are still near record highs, but this year gains have been meager. So I think economy and market, they're moving line in line with each other.
So Tracy, I'll give you the final word. Is the market in trouble here? Is it nearing trouble zone?
Well, a lot of people think, you know, maybe we've reached a top here, and I am starting to see, you know, obviously less value stocks, and even those that have been on a massive run for the last 2 or 3 years, kind of regular mainline companies, not the glamour stocks, those are kind of starting to top out because they can't keep producing the amount of earnings that is needed for the stock market to continue to go up. At least we haven't seen that yet.
Right.
So until we get another surge in the earnings, yeah, I think, you know, there's some issues here that are going to have to be addressed. Either the stock market will pull back or we're going to have to see the pop in the earnings.
Okay, thank you all for that. And don't forget to click on over to our next segment because we have, oh, there you are. Sorry about that. Don't forget to click on over to our next segment because these folks are going to share their top stock picks with you.